Oh my God. Oh, thanks, man. I didn't know. Okay. I didn't know it was not. Okay. Anyways, so you can see that this is the NYSFT. Oh my God, what's up with my scroll wheel? NYSFT, 5 minutes CISD. Boom. 5 minutes CISD. You see this? This low being broken. Boom. Displacement down. Okay. So that's why I'm taking this trade. So even markets are shift wise, you can see that. So boom. So I'm taking a partial at the closest drawn liquidity. So I will partial close this if the closest drawn liquidity is here. So let's wait for this to, because SMT was taken out, right? And plus, if I go to the 4 hour, there's no inter-range liquidity. See, there's no internal range liquidity in this area. So I'm expecting price to low key take this low and then balance things out with this fair value gap, this unbalanced fair value gap, and then impulse higher, right? So that's why I'm taking this trade. So as you can see, there's a depth in displacement. Today is a Monday, which means there's not really much momentum in the markets, but either way, it's fine. So it's okay. And what's up here? Yeah, so this is the drawn liquidity. It's not really the best risk to reward, but it's okay, I guess. It's like 1 to 3. It's not that great, but it's okay. Let's hold it. And you see this impulse displacement. So you see the depth in displacement right here. So right now it seems like this is the 5 minute. So we have the CISD over here, as you can see, broke through this low. Boom, displacement low. Sell off. See? So let's hold this. It's fine. I risked half on this because my account, like one of my accounts went into drawdown. So I'm trading on this like this other account right here. So okay, so I have this one as well, but the other one, like I'm not trading for some reason. I actually don't know why I took the trade on this one, not the other one. Bro, what the fuck is wrong with me? If I knew I was taking a trade on this one, I would have just gone 1%. But in this trade, I only took like what, half a percent. Half a percent, that's like 10 bucks or something. To essentially make this 3.64 ratio. Because you gotta pass that first account in order to get that, you know? Fuck a 10K, you just gotta pass a 2K. Fuck a pigeonhole, I'm a night owl, that's a different time, and what the fuck? Forgot the rest of it. Alright, so what do you see here? No SMT. No SMT at all. Oh wait, we do have SMT. Okay, we do have SMT. But gold seems to be struggling because it seems to be consolidating, see? Gold is consolidating for way too long. Nope, I'm not taking no trades on this. 15 minute. What's up here? Where's the closest? What the fuck? Dude, where the fuck is the closest drawn liquidity? Oh, it's here. Okay. So do we see a 15-minute CISD? I'm not trying to take this. This is too risky. This could just continue. No. Okay, so 5 minutes CISD. Nope. No signs of it. Nope. At least it needs to inverse this fair value gap. If it inverses this fair value gap and closes here, then I would expect maybe. But either way, I would expect price to hold this, like the 1 minute market structure shift, and then hold this. Else I'm not taking no trade. Okay. Alright, so what's the closest draw on liquidity right here? I'm not gonna extend this all the way up here. Because the thing is, like, this spot right here is like super risky. So the most I would go for here is probably until like this first fair value gap. Because there's two fair value gaps that could like flip on your head unless you see a 15-minute CISD. Yeah, so this is rejecting this price level. See? So this is the close, but still, it seems to be rejecting this price level. I'm not trying to. In manipulation, you see the manipulation, but it's not really like convincing. Okay, 15 minute. What do we see here? Okay, so we took out this low, right? We don't see. Do we see a CISD? No, we don't. We see price rejections. Uh. Look at this. SMT. Boom. What do you call this? What's this name? What was the name of this thing? SMP didn't take out the SMTs. That's a little annoying. Let me show you guys the theory behind that. Let me get the theory. Hold on. Yeah, so that's why I took it on ES because I mean NQ because NQ took out the highs. See, but ES didn't. ES didn't take out London size. But NQ did. See? Boom. So let me show you guys something related to divergences and why it's important. Like this exact scenario. Where is it? Okay, so I'm gonna pull up this one. So we don't. Oh wait, what? Okay, never mind. This was 7:30 a.m. Okay, doesn't really apply. All right, so right here, you see. So over here, this is the SMT, right? So this is the pair two, which is correlated with the pair one. So once this one's pair one's like what do you call it? Once pair one takes out the SMT, as you can see, this is the high time for PDA. Boom. See? Boom. Impulse. So that's why this is also selling off. See? This is also selling off. And then if you look at Dow Jones, it's probably selling out, doing the same thing. But it's following, NQ follows in the steps of Dow Jones, so. Yeah, Dow took out the highs as well, see? SMT, boom. Dow's price action is not that convincing though. But Dow's here is basically NQ's here. NQ's at least here. Oh yeah, I was on the 5-minute time frame. What the fuck? Yeah, you see all these highs were ran through. No, NY didn't take out Dow's highs. That's crazy. This is probably the riskiest trade you can take. Like as far as because the thing is like it will induce and like dance around for a long time, especially because we're seeking the most liquidity right now. Because we're at like an all-time high right now, so okay. It's silly. It's having a little bit of a manipulation, but it's okay. It's hold it. That's why I take 0.5 on these kind of trades, because it's an SMT, right? And SMT is like the most highest risk to reward type of thing. Let's wait. Let's let it play. Let's let it play. Let's let it play. It could maybe pull back here. Inverse rivalry gap. Boom. Let it play. We're at an all-time high. That's crazy. Let it play. Let it go. Let it go. Yo, what the fuck? Let it play, man. Just calm down. Look at this. So, boom. SMT. CISD. 5-minute CISD. 5-minute CISD. See this low candle? Manipulation candle between these two. Displacement below that. Boom. Impulse. Might rebalance this inverse rivalry gap. Boom. Just gotta be patient, man. Just don't tweak. Just don't tweak. The only problem that I have right now is the fact that this is like the only like doubt that I have is the fact that this is an all-time high. So like literally the last thing you want to be doing is probably like short in the market because your boy Trump is onto our asses, you know. But yeah, it's fine. Because this is like an all-time high. Look at this. All-time high. That is crazy. No rest in liquidity, nothing. Look at all this. All-time high. That is crazy. Look at that. Boom. All-time high. It's like extreme premium. Because if I get the higher time frame, BOE, I mean. Okay, so this is the swing low. Where is it? Swing low. Swing. Oh, Jesus Christ, what the fuck is this? Oh my god, this is. Oh. Okay, I'm not gonna do that. Alright, so we see. Interesting. This placement is shit because it's Monday. SMT. Boom. I'll take a partial right here. Come on. Don't worry, man. Yeah, just don't check the charts at all. Just chill, you know. Just chill. Don't worry about it. Let it play out. Let it play out, you know. All right, let me show you guys the divergence, like the importance of divergence. I took these notes a while back. All right. So this is the pair one, pair two. Both of them are sort of correlated with each other. So if one takes out the PD arrays lows manipulation, this one basically doesn't need to. So boom. See over here, SMT divergence, BSL is taken. Same way over here. TU, this is inversely correlated. So GBP USD, GBP against USD. So DXY is his dollar index. So it's inversely correlated. So if this one's high is taken, boom, that means this one's buy. Okay, same way it's EU. EU does the same shit if GU is taken out. GU is the moving one, the stronger. Same way if this one's PSL draw is taken, this one's okay. What do you mean strong buy? That's bullshit. Yeah, but NQ is not showing signs of that. Okay. Yeah, so over here, this is the SMT. Boom, impulse right after. Why does it say it if Dow doesn't take the BSL draw to short this market? It's okay, I'm risking only like half on this rated side. Let's let it play. Let it go. Let it go. Dow is consolidating though. It's the only problem that I have. Dow Jones. Dow is consolidating for way too long. But Dow did have like a CISD though. See? Boom. Let me look at the other SMTs. Boom. SMT, right? No, not this one. This one's good. SMT. Lows are ran through. And then you see this change into their delivery. It doesn't really pulse, but wait. Over here, right? This is a good SMT, so let me play back. Alright, let me compare both these charts. Can I do this side by side? Thank you. What is this? Same day? No. Okay, so what is this? Okay, 6th of November. That was 6th of November. M15. I have the 6th of November. Where is it? Over here. There we go. This is the spot in time. Okay. So both of them. Bro, what the fuck? Why is it doing that? 6th November. 6th November. Where is it? Over here? Nope. This one. Alright. Okay. So you see this? Highs are ran through, but this one also ran through the highs. So therefore, why can't I play this forward? Okay. Bro, this is the 11th. What's up with this thing? It's tweaky. Okay, let me go back. There we go. Okay, bro, it keeps resetting. It's so annoying. Okay, so I'm gonna go to here. Man. Okay, so we took out the lows on its SMT on the Dow Jones, and then that's why this impulses, right? It's fine. Let's hold this. Let's hold it. Let's hold it. At least until the 15-minute draws. You see, like SMT was taken out. That's why this impulsed. Because it's like, I'm pretty sure it's impulse right after. Yeah, there we go. Boom. Just like that. See? So it follows just like that. So I'm gonna go to the day before, which is this, which is the 5th of November. Gonna go here. Let me just double check with that. So we took out the lows on this as well. As you can see. Boom, SMT. And we have this impulse right after, because Dow Jones was indicating that. So, what do we see here? SMT. SMT taken out. CISC. Close to strong liquidity. Boom. 3 candles, just like that. Boom. Impulse. Let me double check on this spot as well. This is 31st of October. So 31st of October right here. Alright, so what do we see here? What do we see here? What do we see here? Draw on liquidity, right? Obviously this is a huge low, right? So boom, CISD, what's the closest draw on liquidity? Sort of tweaks a little bit and then it goes and hits eventually. Why? Because okay, Dow took out the lows, right? Dow took out the lows. And this one did the same thing. Except there was no inter-range liquidity holding here. The closest drawn liquidity was hit as soon as possible. In this wave itself. Boom. So yeah. This one didn't take out the London low. Oh wait, London lows are here. Boom. Impulse. Yeah, it did take out the lows. Interesting. So am I not supposed to... Why is it saying? Let me ask GPT. Okay, interesting. Alright, then I'll close this position. Yeah, so if and Dow Jones doesn't take out the high, because over here, right? Dow did not take the high, so that's a good tip. So I got out, and we're not in. Let me go back because Dow did not take out the highs. I mean, Dow had this, but it didn't really like take out the highs. NY's highs, it did not take it out. NY's highs was not. So even though this took out the NY's highs, this one didn't. So let's let it play and let's see what it does. Let me end this real quick. Okay, what's up here? This is the... I'm gonna go back to my old second account. There we go. How can I snooze and miss the moment? You're just too important. Let's continue to sell off. Euro USD. We seem to see a 5-minute CSD. No, not really. We're starting to see signs of possible rejection, but I wouldn't really trust this unless we have one of these. One of these. What are those? It could though. It could because it has been sweeping liquidity. Sweeping a lot of liquidity at this point. Because these lows got ran through, but I need to see a CISD. a minimum CISD. Boom. See? So I could, but I'm not trying to anticipate. I want to react. And you see a ICT 2022 pullback, FAG holding. Boom. Goes to strong liquidity. That, my friends, I will take. Else I'm not. Okay, let's look at the dollar index. Dollar index is peaking. Damn, Trump. What the fuck is Trump doing? Dollar index is peaking. That's crazy. This one is continuing bearish, which means GBP USD is GU is more stronger than the euro. So whatever the fuck the euro, whatever the fuck GP, the pounds do, euro will follow. So whatever the pound does, the euro, right? Plus, yeah, cool. It's okay. Okay. All right. So if I go here, so I was ran through, but this was holding. Okay. Let's hit the first TP. So technically it will hit TP, the draw on liquidity, this one. I don't really want to trust this though, because we don't see the correlation. Where's this? Give me a second. Gotta be quadruple sure about this SMT divergence. That's the G. SMT diver.
Hey traders, and welcome to another episode of Smart Risk. Today in this video, we're going to talk about the smart money technique, SMT. SMT is considered one of the strongest confirmation tools and has the potential to skyrocket your win rates. Mastering this concept will give you the
This is Euro USD and
insight to predict
USD. I'm pretty sure. Let me skip here.
Strength between correlated indices and currency pairs. SMT provides confirmation of stop-loss hunts and can be used to avoid losing trades or exit open positions, as it often signals a potential reversal in the current price trend. It applies to both correlated pairs or indices, which generally move in the same direction, like the ES and NASDAQ, or Eurodollar and Pound Dollar, as both are traded against the US dollar. Additionally, SMT can be used for inversely correlated pairs or indices, such as the dollar index and Eurodollar. In correlated pairs, the price action on both charts should generally follow the same pattern. For example, in this case, on the left side, we have pair 1 where the price has created a low, followed by a lower low. On the right side, pair 2 has made the same pattern, with a low followed by a lower low as well. In both pairs, the sell side liquidity below the lower low has been taken. Since both pairs are moving in tandem, there's no divergence, meaning no crack in the correlation, so there is no SMT. However, if these pairs diverge from each other, for example, if pair 1 forms a lower low and takes the sell side liquidity, while pair 2 creates a higher low instead of a lower low, and the sell side liquidity remains untaken, then this indicates a crack in the correlation. This divergence signals a valid SMT between pair 1 and pair 2. So, what does this mean? This divergence indicates that bulls are starting to take control in pair 2, as it resists put 2.
But okay, in a general sense, this took out the highs though. But London didn't take out the highs of NY on Dow Jones. That's the only problem that I have. I don't know. Let's see if my anticipation was correct or wrong. So I play. What's up here? Yeah, let it play. Let it play.
So, what does this mean?
Let's see.
This divergence indicates that bulls are starting to take control in pair 2, as it resists pushing lower, signaling a potential reversal in price direction. While pair 1 is moving lower, taking out the sell side liquidity and triggering stop losses below the lower low, pair 2 shows greater relative strength by failing to go lower. This resistance to decline line in pair 2 suggests institutional accumulation, hinting that price may soon rise. In a bearish scenario, the opposite applies.
Okay, so this is the high. Okay.
If one pair makes a higher high and sweeps the buy-side liquidity, while the other correlated pair forms a lower high instead of a higher high and does not sweep the buy-side liquidity, we then have a bearish SMT divergence. This shows that the second pair may be under distribution pressure, suggesting a potential downside move. Inversely correlated pairs move in opposite directions. For example, if the price on pair 1 creates lower lows, an inversely correlated pair should form higher highs. In such pairs, price action typically involves taking the sell-side liquidity on one pair and the buy-side liquidity on the other. In this scenario, both pairs are moving in tandem with each other as they are inversely correlated. While one pair is moving lower and making continuous lower lows, the other is moving higher and making continuous higher highs. As a result, there is no break in correlation and therefore no SMT. However, if the price creates lower lows on pair 1 and forms a lower high
Okay.
on pair 2,
We ran these highs, and then this one, on the other hand, didn't run these highs. This high wasn't taken out. So that's the only problem that I have. 'Cause in general, if you want to move the markets, you need to make sure like the level is taken out. So see, this one took out all these lows and then impulsed. Because on, let's say, 8th November, right? 8th November. This is something that I've really forgot to backtest with. But I mean, it's fine. Let's see. 8th November. So 8th November is like yesterday, I think. Yeah. So you see over here. Okay, so you can see the divergence. Took out the low and then it impulsed. So this was 9:15. 9:15. It comes here, takes this out, and then it goes impulses right after. Interesting. Let's see over here, right? London's lows were ran through. This was what? 7th November. London's lows were ran through. All these lows were taken out, and boom, it impulsed. Sort of came all the way down here, but that's still just impulsed. Look at that. So overall, you just need to take the sell side liquidity. If you see like impulses on the what do you call this thing? Dow Jones, that's when like you wanna really consider taking it. Because I need to see one of these lows ran through like this. And then boom, impulsed, close to draw liquidity. Same here. So this worked because of that, right? So these lows were taken out. That's why this one worked. Little things. Yep. Alright, so this is 6th November. Give me a second. So 6th November, you can see NY takes out the lows of London and then it impulses, right? So this is a clear confirmation from NY session to long the market. Boom. Right here, 5th November, right here. NY takes out the lows of London, right? This whole like sell side liquidity draw, boom, impulse right after. And that's what causes this to move the same way. So this was 9 o'clock, and this was, what was this? 9:30. So 9:30 was when the real movement starts to happen. See? Okay, got it. Let's see today's price action. Let's see how the thing played out. See? The only problem that I have is the fact that this is like super high and like, okay, let me go to the 4th November. Boom. Oh, right there. Right there. Okay. So you see this? Boom. Impulse. Close to draw liquidity. So we see the lows being ran through. 4th November. Boom. Closest draw on liquidity. That's because we see this 930 candle. What's this? Where is it? Hmm? Oh wait, no, this took out the highs. But in this case, it didn't really take out the highs. Oh, by highs, I think they mean like the highs of the buy side liquidity. It's not really like the. Okay. Okay, okay, okay. Okay, London. Okay. Okay, okay. Gotcha. Gotcha. That's amazing to hear. Okay, so London took out the highs anyway on both, right? See? London took out the highs of both of them in general. So it should be valid, right? So that's what GPT is saying. You gotta refer to this. SMT is one of the most important things. I actually like fucking fumbled on like getting this properly digested in my head. That's crazy. Ah, okay. Now to see you shine in the night. So yes, if London takes out US 30s highs, yes, USD 5-minute chart. Indeed. Yeah, exactly. Nothing feels better than this. Yeah, it will drop. It will drop 100%. Anyways, I'm not gonna take any other trade because none of the other stuff are really looking that convincing. Of course, I'm not trying to trade this bullshit. But yeah, so pretty much as far as today goes, what I learned is pretty much if the highs were taken out and we see a 5-minute CIST, you can just take it. Because if Dow Jones takes out the highs, see, these highs were ran through, so no problem. Short into the closest strong liquidity, which is essentially here on NQ. Even yeah, even this took out the highs. Look at that. All these liquidity draws were taken out. Impulse. Cool. Interesting. Hmm. Okay. Gotcha. Cool. Interesting. All right. So, yeah, let's let it play out, and let's pretty much just let the fucking thing play out. Anyways, I'm gonna end stream, but basically the trade that I was like, cause I got a little fucking like bamboozled and confused with my shit. Like, pretty much I just quit. But like over here, this is the draw on liquidity right here. Okay, like right below somewhere here, and pretty much targeting these lows right here. Okay, that's the same thing as this. You know what I'm saying? Draw on liquidity. Huge impulse right below that. It's the same thing as this on this chart. Because the inverse fair value gap seems to be holding. There's a lot of shorting that needs to be done until here, but that's price anticipation. I'm not trying to predict this too much. this is the 4 fair value gap, and yeah, I'm expecting price to low-key just drop until like here and then rebalance and then go. See, this whole thing becomes a fair value gap. Right at an all-time high. It's fine. Anyways, yeah, the reason why I posted it out is because like this was not looking too, like, got confused with my own shit, and yeah, that's why. Yeah. Anyways, I'm gonna head out for now. Um, this is the only trade that I'm really thinking of taking. Tomorrow is probably the real day that I'm gonna really take the trades. Forex factory wise, we have and we don't really have anything at 6 p.m. so we're free to take it.